All right, guys. My short-term predictions, not the best. I know because I have the confidence of my higher trend analysis on monthly chart. I know that I have the high probabilities of the trend going in my direction. But when I zoom in on the daily, sometimes I get in too early. I get over enthused. My timing's not right. The market has its own ideas. It needs to marinate more. It needs to correct more. So it's important sometimes to always say, okay, that's fun. I like dipping my toes on the daily, but fortune telling on the daily time frame is kind of hard. Low probability of success. But if you zoom out to the monthly chart, it really gets a lot easier because you have time to reduce all that noise, and you let yourself a chance of the market of really going into the trend that's established with the higher trend analysis, 12-month moving average going upwards. But right now, my latest rabbit hole is bringing me to inflation, guys. Its relationship to gold, to silver, to soy, to sugar, and how one leads the other or the other one leads the other. But eventually they have a strong relationship, not that you can't see in a correlation one-to-one on a correlation indicator, but if you overlap them, you get to see that when one goes parabolic, often those instruments, those assets, those commodities, they move in the same direction as inflation. So here's my inflation, not the money supply inflation. Lots of definitions floating out there for different words. It gets kind of confusing, but this is like the CPI, the cost of living inflation. And that's the one we're going to look at. Another thing I've noticed is it's really violent. The moves are violent. So let's say I like horizontal breakout lines, but with silver, with anything related to inflation, kind of it creeps up on you and it moves fast. Sometimes you're there and you're expecting slow inflation moves, but when something goes haywire, it just explodes. So you have to look for diagonal break lines combined with an indicator of weight of evidence to get in early here. So you have a lower risk. Let's say you enter here and here's the risk. You get out if ever inflation goes below here, and that's your reward. If you wait for all-time highs or beat previous highs, then your risk is a lot lower, a lot more, and less reward. So check it out. Here is my... So I'm going for diagonal arcs. I'm going for diagonal patterns. I just want to get a lead time, and if it's combined with my way of evidence, I know that I'm increasing my chances of having a meaningful breakout. And right here is my arc. I like that one. Hold on. Let me fetch in my previous drawings. Oh, okay, yeah, that one. So for me, if I look at that, inflation, higher lows, higher lows, higher lows, price action squeezing to that diagonal trend line. This could explode at any moment, any month, and we could have this type of scenario where nobody's expecting that. Nobody's expecting inflation to explode like that. But this is actually what is happening right now. It's not going downwards. It's starting to go upwards. 12-month moving average, we're above it, starting to creep up upwards. I have my TSI, my True Trend Index. I have my arc, slanted arc, breakout line, nice hemisphere. And right here, if really it starts picking up, this might actually be the right arc, the right hemisphere, and bounce up violently from there. So I'm not going to put anything past inflation not being at any moment being able to explode out of that. But any break above this trend line here is going to be really significant. And I'm going to show you right now its implications with gold. So let me add gold. All right. So here's gold. Squeeze. Move that down. Log chart. All right. Let's zoom in. All right. When inflation bottomed right here, inflation goes up, and that's Oh, and here's gold broke out. Look at that. Up, up, up. So I know some people say it has maybe no use, or why does gold react like that to inflation? Is it because of the monetary easing that's behind it? Is it the low interest rates? Well, inflation is felt in real life in the inflation metric, and gold is following suit. Not perfect correlation. Inflation goes down, gold stagnates, consolidates for a while, refuses to go down, probably anticipating that there will be more inflation along the way. Oh, inflation picks up. Gold says, okay, I was right to wait and not crash. Inflation picks up. Oh, crash. Inflation goes down. Gold says, okay, let's see how it resets. And off it goes again. Gold goes up. And as soon as inflation peaks, gold peaked just about at the same time, just miraculously. It's waiting in the sidelines. It's going sideways just like it did here. But inflation does not pick up. It stagnates for a while. So gold decides, okay, I have to go back down to match it. And now, I don't know if it's clear, but now you get to see, look at that, whoop, gold follows suit. So now we have a nice arc right here, just like we had with gold. And as inflation is coming up to this neckline, this is what gold has been anticipating. As long as inflation now starts making higher lows and eventually new highs, this is going to be just the juice that gold needs to continue. Here you go. The period of waiting is over. Period of low cost of living is over, and then it goes up. And if inflation starts going sideways or a little bit down, gold might not even go down right away. It might go sideways, and just in case that inflation, or if it expects that inflation is going to go back up, is going to give it a chance to continue its uptrend. So for me, that's pretty clear that it's important to keep a look on this inflation chart. It's another piece of the puzzle. Is it the chicken or the egg? Which one moves the other one? But you could see distinctly that the patterns and the trend directions have a strong correlated feel or visual image to them. All right, so here's the chart cleared up. Here's my inflation chart. I'm gonna add the silver chart, and guys, it's the same thing. You look at these violent bursts in inflation and the cost of living, violent bursts in silver. Same thing here. Sometimes a lag, sometimes one sniffing out the other. Period of less volatile inflation. Silver, that's the 80s, 90s lull. And right here we have the same thing here. Silver reacting strongly to inflation. So if this is my arc, my slanted arc for silver, for inflation, silver, same thing. Left hemisphere, neckline, right hemisphere, one touch, two touch, and right on the brink of a breakout, guys. It's sniffing out. So as long as inflation keeps creeping up and doesn't stall too long and doesn't start going down, silver has the fuel, just like gold had, to follow suit, follow the cost of living going up right here. It's the chart that I see right now. If ever the cost of living is going to go down the drain for some unknown reason, well, silver and gold are probably going to follow suit. But right now, if you look at that, they're definitely in harmony, and there's no mixed signals there. I could even add, so now we know silver, how it's reacting to inflation. Let's remove inflation. And adios. Yeah, let's get rid of that one. And let's add our super duper sugar. Could check on gold tent. Look at that sugar, same thing. Oh, up. Volatile, peak. Look at that, goes down, peak. So that's why I said you can't look at a correlation indicator, because it's going to be all over the place. But you have to get the feel of one leading the other. When they go crazy together, one of them goes crazy before the other. But eventually that they both act in the same manner regards inflation. So where is the arc? Where's the bowl for sugar? Let's see when it's gonna break out. Hide that. So hide. Hide. Love TradingView. All right. So let's go for the big arc, the bigger pattern. Stretch, stretch, stretch. All right, so you get something like that. Maybe it's smaller. So here we go. Here's my trend line. My diagonal trend line. Remember, it moves fast. You want to get in when, so if ever it breaks out here, probably gonna have a strong move, just like we had with, we're gonna have with inflation, just like we're gonna have with silver, and just like we saw that gold's also waiting for that. They're all reacting, for sure sugar is probably reacting to other things, but they're all reacting to the cost of living. Cost of living goes up, more monetary imbalances. They printed more money, there's real money inflation, it leaks out to the goods, everything costs more. It's all related. So here it is for sugar, and I think you could even do, so you have the smaller patterns in this monthly chart, even here, already starting to have some signs of breaking these diagonal trend lines, and then slowly they start skewing. You start hitting higher and higher and higher trend lines until you get a horizontal breakout line, and then after that, horizontal breakout line out of this consolidation pattern. Even here you have another one here, breaks out, and eventually we're going to get that sweet spot here out of this big bull that peaked. And look at that, it peaked in 2011, guys. That was pinpoint the peak of the gold market. 2016, another peak. So let's take a look at another guy. So Carl from Gold Tent said, well, I used to look at a soy. So me, anytime I hear something, I always have to go and look at the chart. And look at that soy. It looks pretty much like silver, guys. I'm going to zoom out. Look how it reacted to silver or to sugar. It peaks. Oh, it's kind of messy here. But if I zoom in, we kind of see it like it's following, peaking at different moments, but the overall trend, it's follows suit. It peaked a little bit after, and after that, it's still, when we had the lower inflation, cost of living, with gold, everything, the commodities peaking. Soy did the same thing, going down, like, oh, a burst, 2016 burst, goes up. So what I'm going to do right now, I'm going to do another bull, because bulls are cool. You see there's a bull for silver. It almost fits for soy. Another trend line. Could almost make a case that I'm going to break out soon. Here's my trend line. Look at that. So even soy is about to get out of its when it looks the most dire, when it looks the most that you're in a downtrend, the end of the world. If you take a different view and you look at different elements that have a relationship to it, that they're breaking out before, that they're leading the sector of how can I say, that ecosystem of instruments that have a link, that work together, then you could start kind of guessing that, okay, this one might not be ready, but it will be ready soon for a breakout. And look at that, another diagonal trend line. So as soon as these start getting overcome, and after that, we're going to have a horizontal breakout line. We'll be out of the bull. Guys, inflation is the key, so I'm going to keep an eye on the cost of living. Definitely, if that peaks, we're going to have a hard time going forward. But if sugar keeps going up, leading, if silver starts taking the lead, leading, if soy starts picking up, leading, inflation, cost of living keeps going up, and gold keeps going up, this bull run, guys, has a long way to go. All right. Thanks for watching, guys. See ya.